Hi, everyone. I'm Stellar Magnet, the founder of Black Sky Society, and we're a collective transcendence network working on a few things. One is a research and arts publication called Black Sky Nexus, and also an event that we recently produced called Autonomous Ecologies.
Hey everyone, I'm Tekin Salimi. I'm the founder of a crypto investment firm called dao5. We're a relatively new firm. We've been around since 2022, and we have about $125 million in committed capital that we invest in all types of projects and technologies within the crypto space. Something unique about us is that our vision is at some time in the next few years, in the future, we are going to convert a portion of our general partner entity, the actual manager of our investment funds, into a DAO. So the idea here is that ultimately investment decisions for DAO5 will be made not just by kind of like a closed investment team, but a more of a decentralized cohort that includes our investment team, but also our advisors and all the portfolio founders we back.
And we are here today because there was an event that just happened in Paris this weekend, and that was Autonomous Ecologies 2. And this is a follow up Hyperspace Exchange for that event. And dao5 was a supporter of that. So, yeah, thank you for that support. And the topic of this conversation is post web, post VC. At Autonomous Ecologies 2, we introduced post web. So, I'm just going to briefly describe that here, and then we can sort of go a bit deeper into the discussion. So the post web, it's aimed to be like a pragmatic stance towards a more hopeful future of the internet. It's different than Web 3. Because within post web, we're trying to emphasize a few different principles. For example, privacy being an important foundation of the post web. So there are other aspects like resiliency, local first, sovereignty, and the idea is to define the sort of future of the internet infrastructure around 6 specific principles to ensure that we actually get closer to manifesting this better version of the internet, because within Web 3 there are a lot of these aspirations exist, but I feel like it's been difficult to sort of build up this momentum where, for example, like privacy is a core paramount of product design, for example. So yeah, within post web, I would say one of the differentiating characteristics is definitely the privacy characteristic, but there are other aspects, for example, like pluralism and community governance as well, where we recognize that within this post web world, it will most likely not be centered around one singular blockchain protocol or one singular architecture. So, taking into consideration how Web 3 or cryptocurrency has progressed over the past decade, interoperability becomes important. So it's like, how do we create this community where you can interoperate with protocols a lot more easily versus trying to create these large centralized kingdoms. So I would say that is a rough rundown of post web. And yeah, so within this post web world, what is also important is a post VC sort of world, because as you've identified with DAO5, the traditional, VC incentive structures are not aligned with how we are building things. So I was wondering if you wanted to talk a little bit more about that.
Yeah, totally. I think really the starting premise that I approach this whole question with is the idea that venture capital as an industry, as a culture, kind of like associated with Sand Hill Road, and even as like just a cohort of human capital and skill set that VCs generally have, is largely associated and was kind of born adjacent to the rise of the internet. So this whole thing comes from kind of like a Web 2 framework. And uh, you see this in many instances, like even in the Web 2 context, if I was starting like a SaaS product or a consumer application of some sort, there's probably no shortage of VCs that are willing to fund me or look at my company today. If I was starting a hardware company, that universe becomes vastly smaller, like really, really quickly. And part of the reason is because hardware is actually very difficult to succeed with. But venture capital generally is very skewed towards this like idea that software companies and internet like software is this low cost, very scalable thing. And the whole culture and mindset of it is looking at KPIs that are very attuned to internet startups. I think that's part of the reason why VC, generally speaking, hasn't been a perfect fit for crypto or post web technologies more broadly. We've also seen this obviously over the last 5 years of these like TradFi or Trad VCs that have entered the crypto space. They kind of come in when things are really, really hot. They usually make the wrong investments in the space. They get burned because they made the wrong investments, and then they leave when things get bad, only to FOMO in the next hot cycle. And not that it's just like destined to fail, but a part of it is because I really think a lot of these funds try to look at crypto through their TradFi or Trad VC lens and use KPIs and success metrics that just don't fit in this brave new world that is crypto and open source protocol development. I just think the way you quantify success and the way you need to look at things is entirely different in this landscape, which is why when you think of a post web world, there is ultimately an investment structure that needs to fit this that is a post VC framework.
And so over the past few years, there have been, different sort of investment DAOs that have emerged. But I've noticed the philosophy around dao5 is quite different. I was wondering if you wanted to talk more about that and sort of like why do you feel like most crypto and why do you feel like most crypto funding does still come from traditional fund structures rather than DAOs, even though we've had these DAO technologies or DAO ideas for a while, ever since 2016 with the start of the DAO, and right now we are seven. Is it been 7 years? Yeah. So, yeah. Why do you think it's taken so long? And yeah, can you describe the incentive structure you're thinking as far as dao5, because I actually think I haven't seen that many incentive structures like this lately.
Yeah, totally. And great question. So on the first question of like, why do we still have VC in the space and why hasn't this, the idea of DAOs or DAOs in practice kind of eaten this and taken over the, the market for funding? I think for us, like 7 years in crypto seems like a very long time. We've seen entire boom and bust cycles. We've seen nascent ideas like the Bitcoin white paper become $100 billion plus protocols. But in the grand scheme of things, like crypto is extremely young. It's infantile still. And even just comparing it to something like the corporate structure, the modern corporation as we know it, corporations and the understanding of how they should operate, the laws that govern them, just like principles in law around them, have been around for hundreds of years and have had the opportunity of kind of getting refined and hardened through just lots of trial and error, lots of legal precedent. DAOs are very, very young still. I think starting with the DAO in 2016, the like inception of this idea really came out, but I feel that no one's really cracked a formula to make a DAO work and sustain just with like a healthy operation over a long period of time. So one of the reasons from my purview that that's happened is um, if you look at DAOs somewhere on a spectrum today, like all the DAOs that exist, and maybe not excluding, I know the term DAO can be used very broadly, like you can call almost any DeFi platform a DAO, maybe just more specifically the ones that like their mandate comes from governance. It's not like a team built a fintech or a DeFi platform and then added governance as a feature. But let's just say pool of capital, decentralized group of people trying to be agents and enact some will on chain. They're either on the far left of this spectrum, like pretty much centralized. All the decision making happens with a small group of people behind closed doors, much like they would in some other business entity like a corporation, but maybe the funds live in some multi sig wallet on chain. Or on the right side of this spectrum, these are truly decentralized entities, and maybe they have hundreds or thousands of members, but they kind of don't work well because it's a tragedy of the commons. There's almost like this idea that the incentives aren't constructed quite right because the buck doesn't stop with any one person. Everyone is kind of incentivized to free ride. Nobody wants to own the work because they think everyone else will free ride. So there's no easy like solution to this problem. I think that the best approach to backing into a solution is to kind of take a progressive decentralization approach. Um, the equivalent like analogy in a blockchain ecosystem would be Ethereum. If you rewind to like 2015, early days of Ethereum, there were relatively few big actors involved in the Ethereum ecosystem. Like you had the Ethereum Foundation, obviously, Consensus as like an arm's length development company building a lot of the infrastructure and tooling. But if you fast forward today, there's hundreds, thousands of companies, nation states using Ethereum, big banks, and a pretty sprawled developer community of open source contributors. So I think starting with a relatively closed group and expanding gradually while preserving kind of the culture and values of whether it's your blockchain ecosystem, in our case, our investment DAO, we're taking the process of like progressive decentralization here.
Yeah, no, that's very interesting that you brought that up. Whenever I got into the DAO space, around 2017, 2016 era, I mean, I got into Ethereum around when the DAO was happening. I didn't buy into the DAO, but it was the idea of the DAO that started to pull me in. And then over the past few years, I've always been this sort of decentralization maximalist type where I'm like, oh no, fuck progressive decentralization. Like, it doesn't make sense. But over the past few months, after being in many DAOs or decentralized communities and just kind of going through going through it, realizing like what you're saying, the sort of tragedy of the commons, or the sort of like, there are people that just like come in and you like do this thing and it's like, it's just not cohesive, and there's been a lot of, mental energy. So I'm definitely on the progressive decentralization camp now after 6 or 7 years of being slightly in denial. So I wanted to, so you announced dao5 around March of last year. So it's been about a year and a half, or a year and 3 months or so. And I read that the goal was that after approximately after 3 years is when you want to try to, decentralize it more, after about 70% of the capital has been deployed. I was wondering if you can just provide a bit of an update as far as where you're at with how much capital has been deployed to date. If you want to talk a little about different projects that have been funded by dao5.
Sure. So I believe when we announced, we said something in the 3 to 5 year time frame. The unfortunate reality of crypto is you always have to give a little bit of leeway because things just take longer or move faster than expected. It's a little bit unpredictable in terms of timelines. But again, like returning to the point that venture capital, like even the idea that VC funds traditionally are like 7 to 10 years, this was all built on kind of mirroring the life cycle of a software company. Because if I seed some SaaS company today, it might take 10 years, assuming the company finds product market fit, to have an IPO or get acquired by some other SaaS company. So again, over time, these structures will evolve to kind of like fit the life cycle of a protocol a little bit better. But yeah, returning to the question, we've deployed about 35-40% of the fund. So I think we're still on track towards this vision of decentralizing the general partner entity. I'll be transparent, like a lot of the details aren't figured out. We kind of know where we're starting from and what the end vision is, but there's a lot of complexity in terms of doing this in a legally compliant way, making sure we don't touch jurisdictions that basically don't recognize DAOs as valid legal entities, or might kind of try to misclassify a digital asset as some other thing that it's not. So yeah, right now the focus is to continue investing, building up the value of the dao5 portfolio as much as possible, and then over time, just looking for very creative ways to start to decentralize the GP. Really, I think where things get interesting too is that we're also going to look into raising more funds in the future so that the dao5 general partner will manage multiple investment vehicles, and with each new fund kind of like having more mind share in the general partner entity, I think is just a net positive for everyone, because as an investor, you back very, very intelligent, like bright founders that understand the space better than you do. And fundamentally, your job is to support them. Being able to leverage their brain capital is just like brings a whole new unlock of value to an investment fund as well.
Yeah, no, that makes a lot of sense. And one thing that I wanted to follow up on also was Yeah, a lot has changed also in the last year and a half. A lot of funds are, pivoting or, adding AI into their thesis. Can you talk a little bit more about sort of like the categories that you're looking at the moment, whether it comes to, like within the post web, I talk about how privacy is an important thing. So where does like ZK or privacy projects fit into the dao5 thesis, and also what about artificial intelligence?
Yeah, totally. And I always say this stuff like I'll try to use my words precisely because it's always a little cringe when there's too many like hot buzzwords of tech areas that are emerging. But I try to think that the investment philosophy of dao5 is a blend of idealism and pragmatism. Fundamentally, we invest in infrastructure. And I know that's another one of those buzzwords that's get thrown around in crypto and means a little bit of everything. But I think of infrastructure as any technology or protocol that just fundamentally makes underlying blockchains perform better or more performant. So privacy is obviously a core tenant there. Better interoperability technologies, better blockchain security, scalability, and a lot of these properties can be captured in technologies like optimistic rollups, ZK rollups. So definitely looking at the privacy and zero knowledge ecosystem, both as a source of solving scalability, but also privacy for these networks. AI, I think, poses a lot of potential. It also has, it's going to bring some healthy benefits to the crypto space because it's kind of this new shinier buzzword industry that all of the like grifters and scammers will gravitate towards. It'll be a magnet for them, which I think because of crypto's like liquidity profile, historically it's also attracted a lot of bad actors, which is an unfortunate reality. But um, our approach is a little bit of like patience and research first on the AI front. We're not rushing to make a ton of investments. I don't think there's any doubt that it's going to be completely revolutionary as an industry. It's going to touch almost every segment of the modern economy as we know it. So crypto will be one of those areas. But where does that actually make sense is a little bit of a more difficult question to answer. There are a few things that seem intuitive upfront, like the zero knowledge machine learning space is really new and emergent, but it's one of the things we're paying attention to. Um, just the idea that if I'm a regular person and I'm prompting ChatGPT or any large language model and getting some result, how do I know that whatever I prompted is actually being run through the correct model and I'm receiving a correct output? Maybe I'm paying for GPT-4, but they're actually running it through GPT-3 and saving money because the compute cost is much lower. And maybe these are things like the average user won't think about on a daily basis, but having rails that provide that trust, I think, is very important. There's already been some Twitter discussion around this type of idea. The other thing is just assuming some of the use cases that these generative AI models will take over time. Think about how much time the average person spends on like their monthly or yearly checkup visits to the doctor. It's We're not very far away from the point that like a language model based physician can diagnose you or kind of like do a virtual checkup much more efficiently and for much less cost than a physical doctor. Um, Whatever the output of me prompting this language model physician and saying, hey, I have a sore throat, I don't feel so well, whatever I get back is actually a medical record. And that has to be governed and it's going to fall under the regulations of medical records, which require a lot of privacy on the way they're preserved. So again, you see that the zero knowledge properties of having the output be like a zero knowledge proof that helps both on the in terms of efficiency, but making these things more compliant. So that's just one area that we're excited about.
Yeah, I think privacy when it comes to using large language models is so important, and I hope that that sort of technology takes off sooner before these more, like OpenAI or what have you. They just get so big that people forget that what information they are giving to these cloud providers. Now I wanted to ask a little bit about, like, I know you haven't fully figured out the incentive design or the structure around dao5 as a DAO yet, since you're going the progressive decentralization route and it's still early on. But there was one aspect of the vision where where, for example, being a part of this network as an alumni or as a project team that has been funded, there might be more incentives to try to, connect with the other technologies in the network, being more interoperable or what have you. I was wondering if you can talk more about the ideas there and if anything is emerging yet with the collaborative relationships in dao5.
Yeah, great question. Um, I think that the whole practice and exercise of VC is fundamentally this like process of trying to convince a founder to take your money instead of someone else's. You can like reduce the whole thing to the idea of branded money. Like the money itself is fungible, but there's something non-fungible behind the scenes, which is what is the value add or like skill set that the investor is going to bring to the table. There's multiple approaches to this, obviously. Um, One of them is to also just give some form of value in addition to money back to founders, something financial, kind of like put your money where your mouth is as well. I think that's where crypto gets extremely interesting because you have seen in Silicon Valley and kind of like Web2 funds and incubators this idea that they always market that they're trying to connect all their founders as this ecosystem to support each other. Um, One example would be like the Y Combinator alumni network, which is usually touted as one of the top reasons to join Y Combinator because you end up being a part of this network of hundreds of founders from different industries that help support each other for years, even after the initial startup. I think that those things have different levels of success. One of the challenges these alumni networks have, or these founder networks in the Web2 context, is there just isn't much financial incentive to spend time helping other founders when you're kind of like focused on your own company. And again, you don't get any like tangible upside for doing that. I think crypto economics become very interesting here because using the magic that is this digital money, this kind of like new digital asset, you can create financial alignment in some economic fashion by doing that. So our ultimate vision is that it's not just like calling on founders' altruism to help other people and contribute back, but really just calling on their self-interest and giving a form of value back so that when founders spend time on DAO5 related decisions, when they help other portfolio companies, they're doing so because in theory it should appreciate the value of some token that's created alignment for them.
Yeah, no, I feel like you're right that crypto is well positioned for this because it's so much faster to issue tokens than it is to add someone to a cap table traditionally, right? So because of the speed of issuing that financial incentive is much faster, it seems like this model can grow a lot more efficiently. So it'd be interesting to see how that develops over time. Um, so yeah, to close out this hyperspace exchange, we're going to go a little bit to the future. So let's fast forward to 2040 now. Um, what other emergent technologies do you feel are going to be playing a role in the future of capital formation? Now we're in 2040. Let's imagine post web, post VC. It is a thing. You know, what what does the world look like? And yeah, what are these new emergent technologies?
Yeah, great question. Always fun to geek out and be a futurist a little bit. Um, I think like a lot of people I know describe our current environment as late stage capitalism. So I can't even imagine how you would the semantics you'd use for how like the ultra late stage capitalism will be in 2040. But just kind of like thinking about this question by starting with some trends that we've noticed over the past 5, 10 years and just drawing them to their logical conclusion. One is the most obvious to me is for the better part of the last 50 years, we've been rapidly moving towards a more globalized world, both in terms of economics, politically, and obviously with technology like social media. Somewhere in the recent past, that trend has started to reverse and things seem to be getting more fractured. And that's happening on multiple fronts. I think one is geopolitical, probably the most biggest driver of this. Um, we're kind of moving away from this world, in my purview at least, that the US dollar has complete supremacy and the US government's direction of things politically kind of govern the entire world. It seems to be moving to a little bit more of a bifurcated political environment with China, the BRIC coalition gaining momentum on one end and the US on the other end. We obviously saw things that were kind of historic, like the first commodities trade settled in renminbi, not USD. And I don't think that this means like that the US dollar is going to go away overnight or collapse or something like that necessarily, but it might lead to an environment where there isn't a single global reserve currency and it's a much more fragmented financial landscape. We're also not just going to see this in terms of like currencies, but we're already seeing what's happening with like the microprocessor supply chain and a world getting prepared for two different supply chains for this kind of like lifeblood of technology, the microprocessor. So in a world that's more fragmented, that's more isolationist, and sorry, I don't want to make this sound so bleak, but there are inevitably some bleak things that we have to deal with in the future. Um, I really think crypto in this type of environment proves its product market value as this kind of interoperable mesh that is 24/7, it's uncensorable, it's ungovernable beyond the rules of the protocols themselves. And it needs to exist because it's going to become much more political what you can and can't do with your own money. And again, like for the last 5 years, having pointed to the use cases of crypto, it's always been this thing that like first world people didn't really see the value because they assume that they have ultimate agency and autonomy with their money. But very rapidly, even in a post-COVID environment, I think people have kind of woken up to that. Like I'm from Canada, for instance. I grew up in Toronto, and there was a Cybertruck rally that gained a lot of media attention during 2021 of Canadians that maybe had different views about how COVID policy and lockdown policy should be approached. And I've heard these firsthand stories of Canadians that were unbanked from very big banks and not like political activists, not wealthy people, sometimes single income families just for donating $100 to the Cybertruck rally. So I think in terms of just the like global psyche of most people realizing they don't actually control and own their own money the way they think they do, crypto is going to become very emergent as this uncensorable financial network that needs to exist. Um, in terms of other technologies, going back to the AI thing, I think that we're going to have community owned or just think of it as language models that are less censored than what we've seen so far. And also, maybe the ownership isn't controlled by some large cap tech company. Whether these will live on chain, whether they'll be open source entirely, that stands to be seen. But I do think that like one of the most important ways for AI agents to express their intelligence and provide utility is to transact on their own account. Um, you could think of this idea as like if a self-driving car could pay a gas station for fuel directly without having human intervention. So I think that if you assume that we're going to have multiple generative AI models existing, some of them closed source, some of them open source, there needs to be some common neutral financial network for them to transact on. I don't think that's going to be through Swift. I think it's probably going to be through some decentralized crypto network.
No, I feel like both of those points are very they make a lot of sense to me as far as predictions of the financial rails of the future. Makes sense that it's crypto, and also because of these autonomous agents that are emerging that might have to pay each other to use each other. So obviously they'll be connected to crypto, and we're going to have a world of future crypto financial rails and autonomous agents that we don't really know. Hopefully they're friendly. Yeah, yeah. So yeah, no, thank you so much for being a part of this Hyperspace Exchange right now, and for dao5's support for autonomous ecologies too. And just want to know if there are any last words you wanted to provide. I'll hand it off to you if you wanted to say anything to anyone to close it off, or to say anything else.
Um, I just want to express my gratitude to everyone in this ecosystem that continues to build and move this technology forward, even when it's not a fair weather environment, and even when things are scary on the regulatory front, on the economic front. Um, you're doing incredibly important work, and we are happy to continue supporting.
Thank you so much. Have a good day or night, everyone.